If you stay with me all the way to the end of today's episode, you'll walk away understanding what a stock actually is, where stocks are traded, why the market moves every day, and why people pay so much attention to it even if they don't personally invest yet.
Intentional, with the money. What do you do with the money? Make it move, make it make sense, make it make sense. This is rooted, we on record.
This is What the Money. I'm Dr. Cece Anthony, and around here, we don't just talk about money, we make it make sense. Welcome back to episode 2. Today, we're talking about stocks, the stock market, Wall Street, the Nasdaq, the Dow. These are words people hear all the time, but many people have never actually had them explained clearly. People hear the market was down today. Tech stocks rallied. The Nasdaq hit another high. And most people just nod along pretending they understand what's happening. But today, we're fixing that. All right, let's start with what the money. Today's article says the S&P 500 and Nasdaq were mostly flat after investors paused following a major AI-driven rally, while also watching tensions in the Middle East. Now, immediately, some people hear that and think, okay, that does sound important, but what does that have to do with me? Let me make it make sense real quick. First, what are the S&P 500, Nasdaq, and Dow Jones? These are stock market indexes. Think of them like scoreboards for the market. The Dow tracks 30 major companies. The S&P 500 tracks 500 of the largest companies in America, and the Nasdaq heavily tracks technology companies like Apple, Microsoft, NVIDIA, Amazon, and other tech-heavy businesses. So when people say the market was up today, they're actually talking about these indexes moving. Now, according to today's article, investors slowed down a little after technology and AI stocks had been running up aggressively. That happens. Sometimes markets pause after a big run upward. Think about sprinting upstairs. Eventually, you stop and you have to catch your breath. Well, markets do the same thing. Now, why were AI and technology stocks cooling off today? Because investors are constantly asking, did these companies rise too far, too fast? Artificial intelligence has become one of the biggest investing stories in the world right now. People believe AI could actually change business, productivity, healthcare, finance, education, customer service, pretty much everything. So investors rush into technology stocks connected to AI. But today, some investors slowed down. Some took profits. Some decided to wait for more information before buying more. At the same time, the market was also paying attention to tensions in the Middle East. This is important. The stock market doesn't only react to companies, it reacts to uncertainty. So wars, oil prices, politics, inflation, interest rates, consumer spending, jobs reports. All of it matters. The article also talked about oil prices falling, chip stocks pulling back, and investors waiting for inflation data later this week. Why? Well, because inflation impacts interest rates. Interest rates impact borrowing. Borrowing impacts spending. Spending impacts businesses, and businesses impact stock prices. See how connected all this is? And even on a day where markets looked mostly flat, thousands of stocks were still moving. Some companies were up big and some were down big. Bath & Body Works jumped after strong earnings. Chip companies pulled back after huge gains. Banks dropped after concerns about expenses. Now, before we move on, when the article mentions chip companies, they're actually talking about semiconductor companies. These are companies that make computer chips, powering things like smartphones, computers, cars, artificial intelligence, data centers, gaming systems, basically our modern life. Companies like NVIDIA, Intel, AMD, and Qualcomm fall into that category. Now, don't confuse chip companies with blue chip companies. Different thing. Blue chip companies are large, established companies with long track records of stability, profitability, and leadership. Think companies people generally recognize and trust. Apple, Microsoft, Coca-Cola, Johnson & Johnson. Companies that have been around for a long time and are considered financially strong. We'll do a full episode breaking down blue chip companies later, but for now, just know chip companies make technology chips, and blue chip companies are considered established, heavyweight companies. That's the market. Millions of people reacting to information in real time. And the reason we watch these movements, well, because markets give us clues about how investors feel about the future of our economy. That's what the money. Now, let me put this on record. One of the biggest reasons people feel intimidated by investing is because nobody ever slowed it down and explained the foundation. People hear the market crashed. The Nasdaq is rallying. Stocks are volatile. And immediately they panic. But if you don't understand what a stock actually is, you'll never understand why markets move. You'll just feel fear every time the news comes on. Think about this. What good choices have you ever made when you were emotional? I'm waiting. Pause and think. I can't tell you one good life choice I made while I was in my feelings. Keep this in mind as we continue to talk about how the markets move. And honestly, a lot of people were taught how to work for money, but never taught how ownership works. And that's the difference. Because when you own stock, you own a piece of a company, not the whole company, not the building, not the CEO's chair, but a tiny ownership stake. And wealthy people understand ownership. That's why education matters so much to me, because I worked with smart people, hardworking people, successful people who simply were never taught these concepts clearly. Not because they weren't capable, because no one ever explained it in plain language. That's what this podcast is. All right, let's make it make sense. Imagine your friend starts a cupcake business. The cupcakes are incredible. People line up every day. Business is booming. Now your friend wants to get a bigger kitchen, hire more employees, get better equipment, and maybe even get a new location. But expansion costs money. So one way to raise money is by selling ownership pieces of that company. That ownership is stock. Now imagine thousands of companies doing the same thing and millions of investors like us buying and selling ownership in those companies every single day. That's the stock market. Now, where does this buying and selling happen? On exchanges like the New York Stock Exchange and the Nasdaq. Think of them like giant marketplaces, except instead of buying shoes or concert tickets, people are buying ownership in businesses. And prices move every day because investors are constantly reacting, getting emotional to information. And remember what I said about making decisions while emotional? It's not the best plan. Good earnings, stocks may rise. Bad news, stocks may fall. Emotion. New technology, stocks may rise. Fear of recession, markets may fall. Emotion. The market is basically millions of opinions and emotions moving in real time. And one more thing, the stock market is not the economy, but it often reacts to what investors think the economy is about to do next. That's why people watch it so closely. You can find the article at the center of today's episode on the feed of my website. This podcast was created for the people who were never taught, but always capable, for the ones figuring it out in real time, for the ones building something out of nothing. This is where confusion gets replaced with clarity, where money stops feeling intimidating and starts feeling intentional. I'm Dr. CC Anthony, and this is What the Money. Thanks for listening to today's episode of What the Money. I hope today helped you better understand what stocks are, why markets move, and why financial news matters, even if you're just beginning your investing journey. If you enjoyed today's episode, make sure you like, follow, comment, share, and if you're watching on YouTube, subscribe. All these little things help the algorithm push this content to more people so we can continue making financial education accessible, relatable, and real. And if you have a money question you want answered on a future episode, send it in. Your question may be featured on the show. Stay rooted, grow intentionally. The opinions expressed herein are for general information only and are not necessarily the opinions of Osaic Wealth or its representatives. It is not intended to provide specific advice or recommendations for any individual. Please consult your financial professional, attorney, or tax advisor with regard to your individual situation. Securities and investment advisory services offered through Osaic Wealth Inc., member FINRA/SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. Osaic Wealth does not provide tax or legal advice.
Yeah, yeah. With the money, what it do? Break it down, make it move. If it's talking, we translate. Make it make sense. This is rooted. Let me put it on record. With the money, yeah, we watching how it's moving. Make it make sense. Yeah, we breaking down the message. Stay rooted. Grow intentional. With the money, what it do? With the money, make it move. Make it make sense. Make it make sense. This is rooted. We on record. Nothing moves alone. Yeah, it's all connected. Check the pattern, then respect it. What you plan here shows up later. Small steps now turn into acres. With the money, yeah, we watching how it's moving. Make it make sense. Yeah, we breaking down the message. Stay rooted. Grow intentional. With the money, what it do? With the money, make it move. Make it make sense. Make it make sense. This is rooted. We on record. Nothing moves alone. We feel the truth. Every choice got roots and proof. Stay rooted. Grow intentional. What the money? What it do? What the money? Make it move.